Yo, what's up, everybody? It's Thursday. October 23rd. I didn't have an opportunity to make a video last night because I was at boxing and I got home late. So I'm doing an intraday video right now. And really, I'm just going to cover what I've been saying over the course of the last few videos, is that we still have positive fiscal flows, although I am keeping an eye on how these net government transfers, how that evolves, because we're down year over year. And I suspect it's going to stay down. But for me, like I've been telling you guys, as long as the leading flows are still above last year, which they are, then I don't see that as a worrisome sign. If those leading flows start to fall below last year and we have net government transfers going down, then yeah, that's going to be a problem. I mentioned to you guys on Tuesday that I thought gold was going to rebound from that big sell-off it had, and we're seeing that happen today. But I still think that we have a top in gold, at least an interim top for a while. And so I don't expect to see any new highs in gold anytime soon. We'll have to watch that. Today, the Trump administration announced a new round of sanctions on Russia, primarily focused on Russian oil exports. Now, this thing, every time I see stuff like this, it just makes me laugh, because who are these economists who propose these policies that are supposed to be punitive? I mean, Trump sees this as a way to pressure Russia into ending the war in Ukraine. And that's just simply not going to happen, because Russia finances the war, finances its economy in its own sovereign currency. Even if the sanctions are, even if they work to slow down or curtail Russian oil exports, the only ones who really get hurt is us, is the rest of the world, who has less access to Russian oil supply. So it's really kind of comical, because American consumers are going to end up paying more money at the gas pump, because we're going to end up filling the void, at least partially, of what's lost in terms of global Russian oil exports. So the United States will export more, leaving less product, crude, refined products here in the United States. Prices are going to go up. U.S. consumers, and indeed global consumers, are going to have to pay more if the sanctions do what they're supposed to do, which is to limit Russian oil sales. I don't know who proposes these policies or why they think this is something that is going to work. The other thing, which is the irony, is that less Russian oil exports, what that equates to is more energy abundance for Russians. I mean, if Russia can't export its energy, it stays in the Russian economy and it goes to the benefit of Russian citizens. I mean, this is just a policy which has the effect of putting the negative impact on American consumers and other consumers around the world. It's going to have no impact whatsoever on Russia's ability to continue fighting this war, because, as I said, all of its expenditures related to the war and everything else are paid in rubles. So, I mean, this idea that Russia needs dollars to finance this war is completely ridiculous, or that it needs euros or yuan or anything else. I mean, it's this stupid, idiotic policy that comes from a total lack of understanding of economics, a total lack of understanding of sovereign money and sovereign currency. Like I said, the only impact this is going to have, the only negative impact this is going to have is to American consumers and consumers around the globe, but not Russians. Not Russians in the slightest bit. It's not going to be effective in forcing Russia to end the war. I mean, Putin's got to be laughing at this. I mean, this is just a stupid, idiotic policy that makes no sense at all. I mean, oil prices, we can go back. We can go back to 2022 when when the war first started, and there were a lot of sanctions levied on Russia and Russian oil exports in the Biden administration. I mean, you could argue right now that oil and gasoline prices would be a lot lower if those sanctions were not applied. I mean, thankfully, they're not crazy right now, but we saw the jump this morning. I think the jump, we were up something like 5%. 5% crude increased on this report, and that I think it's a true reflection of the impact of these sanctions, of what's going to happen as a result of these sanctions. It's just a stupid, idiotic, ill-conceived policy. Who's ever proposing this, whoever thinks, it's another one of these examples of, well, it hasn't worked in the past, so let's do some more of it. All right? It's like the monetarist examples that we've seen so many. Well, let's raise interest rates to squash inflation. And every time we raise interest rates, inflation goes higher because the cost of credit is reflected in the cost of all goods and services. So that creates the base, that sets the general price level. And it's the reason why you look at a country like Switzerland that has a 0% interest rate and no inflation. I mean, if monetarists understood their own policies, they would be able to connect the dots and see that countries like Japan and Switzerland that have 0 or very low interest rates also have low inflation, and why countries like Argentina and Turkey that have extremely high interest rates have very high inflation. But it's like they have some kind of a mental block from even looking at these, how these things play out, and questioning them. They just go with this completely wrong orthodoxy that's ingrained in their belief system. And it's like the establishment way to see things, and they're not going to deviate from that. So same thing here with the Russian oil sanctions. Oh, let's put more sanctions, and immediately the impact is seen in the oil market. That price goes up. So we're going to be paying more at the gas pump now for these sanctions. Not going to hurt the Russians. And it's not going to keep Putin from stopping the war. I mean, it's a stupid, idiotic policy. But look, what I always say, if you have knowledge, if you have understanding, you can profit from these things. I'm buying oil stocks because who do you think is going to, I'll tell you who this might hurt. In addition to U.S. and global consumers, non-Russian consumers, it might hurt the profits of North American oil companies and other oil companies. Okay, it might hurt their profits. I'm sorry, no, it might hurt Russian oil producers' profits. If you want to take the other side of that, you want to own American oil companies or global oil companies. I'm buying oil stocks right now. I have a big position in oil stocks, but I'm going to buy more because they're going to step in to fill the void that the Russian oil producers are going to be forced out of. So those stocks are going to go up. Their earnings are going to go up. Stock prices are going to go up. So here's another example of how, if you understand policy and the impact of policy, you could use that to your advantage. You could profit off of that. So you never have to be scared. You just have to have the knowledge and the understanding, and then you could implement that, and you could come out for yourself benefiting greatly. Anyway, that's it for today. Well, not for today. That's it for right now. I wanted to do this intraday because I didn't have a chance to do my video yesterday. But probably I'll do another one after the close today. Okay, see you guys. Bye.